Welcome back. You're watching the CNBC TV 18 special broadcast, and we're talking about Ruchir Sharma's latest hypothesis, where he basically argues that there is no connection between politics and economics in India. One of his arguments pertains to the Indian stock markets. Ruchir says India's stock market continues to move in line with other stock markets around the world, and anyone who made investment decisions based on Modi's political agenda currently looks like a loser, whether they bet on him or against him. So, Ruchir, now let's talk about the Indian stock markets and the connection with Modinomics, or the lack thereof.
Yeah, so I think that if you look at what's happened in the stock market ever since his government came to power, so the real pessimists would have said that the stock market's going to sort of tank, just because they had all sorts of concerns about what was going to happen to the social fabric of this nation. Instead, the stock market's up more than 20%, since Modi came to power. On the other hand, if you look at what has worked in the stock market over the last 3 years, you'll find it has nothing to do with the government or politics. The best performing sector since May 2014 has been the consumer staples sector. This reflects the fact that what's really driving the Indian economy over the last 3 years has been consumption. And as we know from instances across the world, that the government really doesn't have much of an impact on consumption as much it has on investment. Investment is what the government can really drive by creating the investment environment for investment to pick up or pushing that. Instead, if you look at investment-related stocks in India, those have done quite poorly on a relative basis, especially over the last 3 years.
So what investors were calling the Modi basket, you believe that those have underperformed?
Absolutely. I mean, the evidence is very clear for that. So if you look at infrastructure stocks or investment, manufacturing kind of stocks, these have done quite poorly over the last 3 years on a relative basis.
Even though the assumption was that these would actually have been the outperformers, given the fact that there was a lot of expectation around what would happen on the investment side.
Yes, and also if you look at public sector companies, in terms of how poorly that they have done on a relative basis. So this bull market has really been led by consumer staples kind of stocks which are benefiting from consumption, and other very high-quality private sector companies which have done well, whereas the public sector companies continue to languish in general, with some exceptions like the oil marketing companies, because of the collapse in the price of oil, have done decently. But in general, if you look at the sector breakdown, you'll find it has very little to do with the government. And this also goes back to the other piece of research which I had done earlier, which is that typically we found that when a new leader comes to power, that stock market of that country does well for the first 2 or 3 years on a relative basis. Now, if you look at India's performance compared to other emerging markets, India has outperformed, but a lot less than implied by the research, which shows that typically when a new leader comes to power in the first 2 or 3 years, the stock market of a country tends to outperform by 20-30%. In India's case, it's been closer to about 10-15%, the extent of outperformance vis-a-vis other emerging markets. So my simple point being here that the connection between politics and economics in this country is rather limited, and the stock market's behavior over the last 3 years, since this government came to power, has only reinforced that notion. If you just look at both the internals of the market in terms of what's done well, and also the overall market. So neither the pessimists or the optimists on the Modi government would have made any money based on a political view. So as I said, in this country, if you want to do well, you got to almost be...
Tune out the politics.
Exactly. Tune out the politics and be in internal exile as far as the politics is concerned, because that only interferes with sort of making money in this nation.
But let me ask you about what your view is on the Indian stock market currently, given where we find ourselves, given where the economy is, given the flows that are coming in, specifically the domestic flows. What's the view on India today?
I mean, if you look at the nature of flows has changed a bit because of the sort of very strong domestic flows that we've got in the stock market. But if you look at the Indian stock market's behavior on an overall basis, on a daily basis, it pretty much tracks other emerging markets. So even if you look at this year, the average emerging market this year is up about 25% in dollar terms. Guess how much India is up? 25% or so in dollar terms or so. So I'd say the Indian stock market remains highly correlated to the rest of the world on a daily basis. So the future as to of this bull market, I think, is very much dependent, therefore, on the global bull market rather than to do with the Indian bull market. Having said that, what you do find over time is that whereas on a daily basis the correlations are very tight, over time the Indian stock market does steadily outperform other emerging markets. It's done this for now 20-30 years. just like the Indian economy, as I said earlier, tends to grow about 2 percentage points faster than the average emerging market, the Indian stock market also steadily outperforms over time. And that relationship is very much online currently. If you look at the Indian stock market, steady outperformance over time, and that slope is exactly what the Indian market is following currently. So I'd say that the Indian stock market, I still expect both the Indian economy and the Indian stock market to steadily outperform other emerging markets. And the macroeconomic volatility that we see in this country is amongst the lowest that we have of any nation. But now you take that view at a macro level and then see how to implement it, and it gets much more interesting and somewhat complex as well. But the most remarkable feature I find of this bull market is that this has possibly been the cleanest bull market in India's history. We've seen many bull markets. I mean, I've been tracking this now for over 25 years. And typically when you get a bull market in India, a lot of low-quality companies do very well. A lot of so-called shady businesses end up sort of having their time in the sun. And yet what we find in this bull market is that quality has worked like never before. And that's a major break from the past. And this again goes back to about...
So wouldn't that then be connected to politics?
Well,
or at least governance largely.
Yeah, I mean, you can argue, but if you look at as to when that started, as you said, the low point for India, and the low point was when crony capitalism was at its peak, like at the early part of last decade. But really, since about 2012, 2013, what we have seen is a steady trend where crony capitalism, at least as reflected in stock market values, has been declining, and declining quite sharply, and quality has been doing very well. So I'd say that this is a trend which predates even this government coming to power. Now, sure, to this government's credit, I think it's a very important symbolic thing that at the central level, at least, there has been no corruption or no sort of high-level case of corruption, and that's quite commendable, because in any emerging nation, we expect those sort of...
Those headlines, yes.
Exactly, like those headlines to come. So that's commendable. But the stock market, I feel, is almost independent of what's going on. That if you look at it, that even before the government came to power, at least in the stock market terms, you found that crony capitalism was declining and quality was doing really well. And how do I define quality? I define quality as companies that are steadily able to deliver earnings growth of, let's say, 15% or more every year, show a return on equity of 15% or so every year on a steady basis. And I cannot remember any bull phase in India where quality has done so well. And this is where, again, so many people have been wrong about it, because when the government came to power, there were the usual drum beating on how you need to sort of now buy low quality, buy capex companies, buy infrastructure companies. A lot of drum beating took place. And that's just been wrong, because even if you were bullish on the market based on that political thesis, you would have underperformed dramatically by buying those companies. And our game is about outperforming and doing better than the market. Instead, had you stuck to quality, you would have done really well. And in that regard, I have to say India is very unique. And so, therefore, it's very hard to get pessimistic about India, even when the macroeconomic variables are looking very bad, just because the quality of companies we find in India, the number, is almost unparalleled in any emerging market. So that's a little exercise that I did along with the team, that we had a look at which emerging nations have the highest number of quality companies in them, defined, as I said, with companies which for, let's say, 5 years have steadily grown their earnings at 15% a year and have also delivered a return on equity of more than 15% a year. Which country has the highest number of those companies, those quality companies? And we find that, with the exception of the domestic Chinese market, India basically stands out, and stands out by a long shot.
So that's the big bet that you're making on the Indian private sector. Yeah,
I mean, the Indian private sector, but even narrowing it down further, that the good thing in India is that given the number of quality companies you have, you do not have to sort of go down and, buy all these companies which may be politically connected and think that that's the way to make money in this country. It just doesn't work in this country to buy politically connected companies as well. That's another sort of, finding that we had. And if you look at the number, like one of my big complaints with India last decade, which again wrote about in my first book, was the number of bad billionaires who seem to have risen, like in this nation. And I defined bad billionaires as those sort of billionaires, coming from sectors which are
linked to politics.
Exactly, linked to politics. That billionaire wealth has been decimated this decade On the other hand, the good billionaires coming from sectors such as manufacturing or pharmaceuticals or those healthcare, those kind of, where the government's role is extremely limited in explaining the success, those billionaires have done really well this decade. So this bifurcation that we've seen in this Indian stock market is, I think, very remarkable. And also the fact that for stock pickers in particular, India remains such a haven because of the number of companies. There is no other stock market from Brazil to Russia to even South Africa and Mexico, all these emerging nations, where you get so many high-quality companies as you get in India.
So given the hypothesis that this is the cleanest bull market that India has ever seen, the fact that we've got domestic liquidity like never before, unless and until something goes drastically, horribly wrong with global factors, rising geopolitical tensions between North Korea and the US, for instance, which dries up global liquidity, you believe that this bull run has legs to continue? Yeah,
I think that over a period of time, I do feel that the Indian stock market is going to continue its path of steadily outperforming. And of these companies, like these 30 to 40 companies are companies that will keep delivering for you over a long period of time. It's also because these businesses in India really know how to negotiate the local environment. Like how do you sort of negotiate a very tough bureaucratic environment that you have at home. So I think that's true. But yes, your basic point that the risks to the Indian bull market come more from external than domestic factors is absolutely valid. On that, though, as you know, I'm a bit more cautious because on the global bull market, remember that we're now in the 9th year of this global bull market. This is the second longest bull market in history after the 1990s that the United States, being the leading country here, has seen. So that, I remain a bit concerned. And valuations have become very expensive because you're in the 9th year of a bull market and we have not had a serious correction even in this bull market for a long period of time. And a lot of this has been driven by the fact that central banks across the world, led by the Federal Reserve, have maintained a very easy monetary policy stance. And if they begin to change that, that will begin to have a big impact on the global bull market much sooner than what people think. So I'd say that the global sort of cues aren't that positive if I were to look out over the next couple of years, because I feel that the global bull market is quite extended, particularly like in the United States. But within that, I do think that many emerging nations, including India, should steadily outperform over the next few years.
Before I take a break, let me ask you about what's happening in the US currently, Ruchir, and global markets very, very volatile every time President Trump tweets. And of course, the last one said he's locked and loaded.
Right.
So how does one make sense of how the market is likely to react to these daily developments on the geopolitical front?
Listen, I think the markets were looking for an excuse to sort of sell off here. As I said, this has been, like you talk about volatility, but if you look at the measures here, this has been one of the least volatile bull markets in US history. So we've forgotten what volatility looks like. We get a 1% move in a day, which is, I think, that the 1% fall that we saw last week on one day was possibly the second largest fall that we saw the whole year or something. So I think that we tend to exaggerate in terms of volatility. I think that it's been very low volatility, and we should expect more volatility going ahead. And these events like North Korea is just an excuse, I think, for some sort of two-way risk to come back into the market. This is a very extended bull market in the United States, and I think that the impact of Trump is way exaggerated. I think that, even markets have been ignoring a lot of this ever since he came to power. In fact, the volatility of the stock market has been shockingly low ever since he came to power. So I think that North Korea is just an excuse.
For the markets to correct.
Exactly. But now, something can always spin out of control. There's always that risk, and you can sort of do that. But I'd say that that's not what's really seriously priced into the markets just now.
Okay. On that note, we will take a break. But when we return, we'll deal with the key risks that are facing the Indian economy and the new math for measuring economic success. That and more when we return on this chat with Ruchir Sharma.